This is Taking Stock on Bloomberg. I'm Pimm Fox. Now, the cost of commodity shipping is down for the second consecutive day. That's according to the Baltic Dry Index. Shipping analysts say the addition of new dry bulk ships is helping to keep prices down. So how are shippers dealing with those pressures, and what's the outlook for investors? We begin a pair of chief executive sit-downs with the heads of shipping companies. Angeliki Frangou is the chairman and chief executive officer of Navios Maritime Partners. Angeliki has held that position since 2005. Angeliki, good to have you with us on Bloomberg.
Thank you.
Now, since 2005, you've expanded the company a little bit. Indeed, there are 3 Navios entities. There is a Navios limited partnership, which people can buy. There is another Navios company, Maritime, which is just a dry bulk carrier.
Yes,
and then you've recently put together something else, Navios Acquisition, which is focused on the tanker markets. Why all 3? What's the advantage?
This is a very good question. We like to give ability for our investors to have a clear strategy. People like growth companies in the dry bulk can go in Navios Holding. The holding company is a dry bulk, pure growth. We have then Navios Partners, which is an MLP and gives a nice distribution for people that they like the distribution and the benefits of an MLP. And then we have Navios Acquisition, which is a growth tanker company. All the companies are driven by the same factors, which is China is emerging markets, with China #1 and India following. And the prospect for emerging markets is good. We foresee that next year will be, again, another growth period. All the IMF have come out that emerging markets will be growing for around 6% versus developed world, which is around 2%. So the pure driver is emerging markets and China.
Let's talk about dry bulk for just a moment. Now, you have made acquisitions to the fleet, additions to the fleet. Why are you doing that, and are you getting the ships at rock bottom prices?
We are opportunistic about it. There's years we never did anything, and then in mid-2009 we acquired 9 capes at attractive rates, at attractive evaluations, and very nice yesterday's cash flows. So this is the vessels we got. They are now delivering from the shipyards, and we have visibility on our earnings while we have profit sharing in the majority of them to share the upside. So we are not shy of doing investments when we see the right moment.
Now, you talked about visibility, and one of the ways to get visibility on the shipping business is to learn whether you have contracted out the ships. What's the status of that for the dry bulk company?
We are over 80%. We are approximately 75–80% fixed. So Navios has a long view. We can have the ability to really know how to, we can take a very long view on shipping, and that's why we're very quick on taking opportunities on distressed deals. Because we know 2011 we are almost 80% fixed, 2012 we are almost 60% fixed. So we don't care about small volatilities. We have the ability, and we have a very strong cash flow. Our liquidity, as we announced in our results, is over 300 million, 350 million. So we are sitting in nice cash, strong balance sheet, and we have visibility of revenues for the next couple of years. So we're able to really act without really being influenced by small ups and downs of the market that always happen.
All right, let's turn your attention now to what's happening in the tanker markets. Why did you want to go into the tanker business? I mean, you were an expert in dry bulk. What led you to want to get into the tanker business?
It was totally opportunistic. We had done a raising back in July of 2008. That was a totally different world. There was a credit crunch. We never expected the type of opportunities that will come with the default, with the Lehman default. And what we did is we waited after that to see where assets settled. So in 2010 we stepped in and we did 2 transactions, almost $1 billion of acquisition, 22 vessels. We did 13 product tankers, and then we did 7 VLCCs. This is a nice portfolio of assets. We did distressed deals, and we're able really today to buy assets not only on the cyclical low, on sometimes the historical low. Nobody has a crystal ball to know if this is the absolute bottom, but we know we are in the correct zip code. And because we also on our VLCCs, we got vessels with time charters.
Those are the very large crude carriers.
Yes, the largest. We are able to really benefit having our entire fleet. We know that with these vessels we will be able to cover the cost of our entire fleet, and we have 9 years contracts, and the majority of these have 7 out of 9 have profit sharing. So we have also upside.
And just to be clear, there are 3 companies. There's Navios Acquisition, that is the tanker company. Navios Partners, the master limited partnership. And Navios Holding, that is the dry bulk company. That's pretty good, right? A trifecta.
Very good.
You like that? All right, so maybe you're going to change the name to make it easier to distinguish all 3. Maybe just Navios Tanker. Did that occur?
We'll take it into consideration.
Okay. Now, so what are you getting from the customer side right now? Are they demanding a lot of ships, a lot of steaming time? What's happening? Because we know that journeys, at least for the tanker industry, journeys seem to have gotten a little bit longer because you're moving a lot of oil, a lot of product from the Middle East all the way to China.
I think China is the #1 country to watch, because this is where the incremental growth goes. China has been the second importer of crude this year, and 30% of the incremental growth.
30% of the incremental growth in crude imports into China.
Into China. And just to give you very simple statistics, China is per capita consuming about 1/5 of what Europe is consuming and about 1/9 of what US is consuming. And if we see India, which is another populous country, they consume about 1/27 of what US is consuming. So you realize the upside potential of these countries just to reach a level of Europe is tremendous. You're talking that it will add tremendous to the...
So you expect this trend to continue?
And this is where the growth is. If you're looking on a growth area, it is really emerging markets, with China leading the way.
Now, what about the order book? The ships that were placed on order, whether they be dry bulk or whether they be tankers, is there going to be a flood of new ships hitting the market?
There was a real blessing in disguise, because we had the financial crisis. So the order book that was looking very huge and scary. Because of the financial crisis, we saw that 40% on the, and we were one of the early companies to say that, and I think it was in your program, 40% didn't deliver in 2009.
Right, the financing dried up.
Dried up. You had yesterday prices. Assets had settled in a different level. So a lot of the contracts that were put before the crisis never materialized. So we saw that in the dry bulk we have over 40% non-deliveries. And in the tanker sector we are looking on the crude around 30%, and on the product, the refined products, you're looking at over 50% non-deliveries. So this is something that is not going to stop. In 2011 it will continue. Deliveries will not materialize in the way people expected. And if emerging markets continue the way we see them, and with the developed world being the question mark today, this is where you will see markets fully recovering. In the past, we used to follow the developed world and know what will happen. Now we have to, emerging markets are leading the way. They have surpassed 2008 pre-crisis level, over 10%, and it's really up to the developed world to start doing the catch-up.
All right, well, we're going to have to leave it there, but I want to thank you very much, Angeliki Frangou, the chairman of Navios Acquisition, Navios Holding, and Navios Partners. Well done. All right.